All right, let's go through. I'm just going to go through a random amount of pairs, and I'm just going to look at the 23 Fibonacci retracement strategy that I like to use, and we're going to see how it play out. All right, we got a nice little move, retest back this area. All right, and let's move this to be perfect right there. All right, so I'm just going to go through these fairly quickly. All right, we had a nice little impulsive move. We had a drop that cleared what, the 23%. Where we at right here. All right. So you can't see it. Let's see if we can make this bigger so you can see. Wrong one. Let's do this. All right, this looks a little better. All right. All right, so you see this. All right, we get back above. All right, the 23%. All right, we broke it and we made our way down to the 61%. So we like to just focus on the 61%. Of course, you can go further. So all these videos I'm about to do, we're just gonna focus on that. So it's a nice 22 pip drop to that. So that was successful. In fact, I just got out on that trade. I just took profits on that. All right, so let's go look at the Euro USD, and I'm just gonna go through and see how this strategy aligns. Right now, we got a double top on the 15 minute, but we're going to look at these impulses. So we're going to take it from here. And we like to take the most recent impulsive move. All right. So look at this. All right. We get up here. All right. We dropped below 23%. We came back above 23%. Now, I'm not going to do the retest back above and find the entry points. I'm just going to look at price action. You guys can see I can do that on another video. Price back above. And then what happens? We get down to what, 61? All right. We got on this one. All right. So that trade would have been a success. All right. And what I'm gonna do to keep it simple, I'm just gonna take the measurement just for the 23% all the way down to 61. So it's not like I'm trying to get the most favorable because we're going back in hindsight. So I'm just giving you actually the most worst entry you probably could take based off of this, even though we like to take the trade once it gets back above the 23%. But that was 13 pips. I mean, it's decent. You scalping, it's pretty good. Of course, if we get the entry that we normally take, it would have been more. But I'm just doing this for speed. All right. Let's get rid of all this other stuff that's going on. All right. So we got to double top on that as well, too. And let's see whether or not we get a nice little move back. All right. Okay. So this one gets down to the 50% and then make it all the way. That's fine. So let's say we did enter this trade from here to at least the 51. That's 15, the 17 pips. You can move your stop loss. What we should, what we suggest, you move stop loss into profit. So you would have been fine. That's based off of what you want to do. Now, here's the good part. This move is not over. Now we can stretch this over, all right, to this resistance point on top number 2. And we're still looking for the same thing. We got down. We crossed 23%. We're back above 23% right now. So price did try to get down. It's back above. This is a good setup. All right. And so for this setup, if we can actually find favorable entry where we at now and get down to the 61, we're talking about a 30 pip drop. It's pretty good. Once again, this is not financial advice, but that could be a setup. So a lot of you probably gonna see this video late, so the move might be over. But hey, let's come back and let's check on this at a later day, not date, but later today. All right, let's see. All right, let's go look at the Australian dollar USD. So now we have more of a bearish move. So we're gonna go from the top down to the bottom. All right, we crossed over to 23%. All right, so we're gonna see if this thing can get back up here, and if it can, this is the area where we want to see if we can get back to the 61. That's 15 pips. If that does happen, all right. So that's something to play around with. However, once again, you gotta look at these levels, and you gotta make sure you respect this particular area right here. Now, if that happens, you're gonna do this. Remember, we could take it from here. So I just did that based off of this, just in case you get a retest. All right, but here's another move that is really the most overall trend. This bullish impulsive move. And what do we have? We have what? Break, back across, drop. All right, 61% next level. So this one's already would have been in play. And to get to there is about 30 pips. Currently, if you're still in, you get a 20 pip. And that depends on if you got back in on a retest above here. But once again, if we're going to just do it based off of just really at the 23%, you up 11. All right. I guess that's decent. And once again, I'm just giving you the worst case scenario of an entry. All right, look at CAD, JPY. I'm just going through random pairs. Um, Here's another one right here. Boom, bam. All right, we had a break. All right, price came back above 23%. Drop, boom, 61. Targets would have been hit. That's 23 pips. All right, next. What's another one? Euro, JPY, and I might do like a crypto and a uh, stock. All right, so we can do this one. All right, let's say we did this one. All right, we came, we crossed 23%. We got to the 50, then we came back down. All right, and it really wicked out. But here's a good thing. Let's say you got in an entry right here, and it depends on what your level of your stop loss. Back here is 20. I like to do 30 pip stop loss, so I would have been here. So if I would have entered in right here, that's fine. We cool. So I would have been in drawdown, but then price would have came. We're gonna take it back to the 61%. We get here, would have made 40 pip. Taking the standard lot size, you just made 400 something odd dollars. But at the same time, too, if you would have been holding on through the drawdown, you would have been down 200. So that might have made some people uncomfortable. But regardless, by using these rules, saying in, we see that we do get to the 61%. So guys, this is what I use to really build my momentum and stand in the game. Even though a lot of people think I just trade the double tops and bottoms, like nah, like I really am a fib trader. I usually just use this strategy, to be honest. All right, let's do a stop. Let's just look at Walmart. I think that had something going on over there. All right. If we here, we're doing this. All right, what happened? All right, so we here, and then all right, it dropped. Um, oh, sometimes we may have to go on a lower time frame to see what's happening. So I want to take a look on maybe a 5 minute chart, and let me see how these levels look up. Sometimes the 23 could be touch. Now, here's another thing you want to take notice of. Sometimes it doesn't cross back over to 23. It retested 23%. So that's why you saw me saying, well, let's just go ahead. Worst case scenario, take the trade coming in based off of that. Of course, these are stocks. So um, the percentage is going to be different. It's going to be ticks and not pips. But if you're taking option contracts, you can make it. Now, I don't know if this will be a favorable entry. We really want to see it come back above, but you can still respect the line. But nonetheless, you still see it comes back to the 61. Of course, it goes lower. Now, this does count as coming back above. So this could be a good area to get ready to possibly you could be looking for shorts. Um, I'm not saying shorts, but you get what I'm saying. If you're playing this retracement, these retracement levels, this is back above. We still could come back down to 61s or further because typically when you pierce one level, the next level is up. So this 78 still could be a play that we could come down. That's not to say that it's going to happen, but I'm saying it could. All right. But this is one of these ones where if you can't look at it, identify it pretty quickly, I just move on. That's to me, this is too much being speculative on it. So move on. Let's look at Disney. All right, perfect. Disney, as we expected earlier. Let's do this. We had a nice little move up. We play levels. All right, we do cross 23%. We get back above a little bit, not much, but then we go ahead and we violate and we go down and we knock out these levels. So if we got out here, get to the 61. All right, that's a 2% drop. Like I said, options were it's pretty decent, real nice on that. Um, so right now the dollar is moving pretty strong. All these equities getting ate up. Look at Bitcoin. All right, Bitcoin. Let's see what you had going on. Um, I don't think anything really played out. Let's see. It got across 23, came back, but it failed. It didn't keep going. So if you were playing that, you would have had a protected stop loss in if you was looking for it to get back up here, but ultimately it failed, never came back. So that wouldn't have worked. This one, possibly. Let's see what it's talking about. All right, boom. All right. Get a 23. Boom. Right here. Cross back below. Fight to get back. It got to the 61. So this would have been successful based off of that. All right. So y'all see how this works. But if you also can look at this right here, we had this massive drop off right here. And we never retest any of these levels really to get back up to the upside. So we got this drop. And this is what we're playing with. And we get crossed over to 23% multiple times. You know, we really range. We try to fight. We get to the 38, we get rejected. Really couldn't do much. And it's ultimately just fell to the downside. And guess what? That happens. So if you've been looking to get to the 61, where we never got there, yeah, no system was going to win them all. I mean, it is what it is, guys. So get that out your head. A lot of people, for whatever reason, get in trading thinking that everything is supposed to work. It's not how it works. However, y'all are gonna see these double tops been playing out. I mean, double bottoms and tops. Like so, boom, boom. That's money, right? That's money. That's money. All right. Uh, let's see what's happening with this. All right. Look what happened. Bam. Back across 23%. Boom. Drop down to 61. Futures contracts. So I mean, it moved 1.3%. So if you're doing a 10x leverage, I mean that's 13% on your money. So that's pretty decent. For whatever reason, if you would have got bulk of the move, you hovering in at 2%, 2.2%. So 20% on your account for futures contracts. It's not bad. I'm gonna stop there. Well, let me just do gold, gold or oil. Let's say U.S. oil maybe. Let's do that. All right, see like a double bottom is forming. Let's see how that play out. But here we go. Had a nice little move up. Boom. And we had a cross of 23% right here. However, we did not get back above. However, sometimes you go down to a lower time frame, you might be able to see something. And like I said, we don't. We don't get back above. So you possibly could have missed this particular move. Nonetheless, it still came down to the 61. But if we're using the rule that we're using, we would have never really tried to find entry based off that trade style. If you had another type of strategy, then maybe you would have been able to catch that. But other than that, that's really it. All right, y'all hit the like button, subscribe. It's your boy E White. I'm out. Trade safe.